Welcome to StraddleIncome. We're here to help you make money. Today is January 31st, the end of the January of 2021. 2021 has proved to be an even more exciting year than 2020. So in today's video, we'll be talking about two questions and try to find the answer for those questions. First, when will the GME revolution end? And the second question is what AMC stock price will be at by February 5th, next Friday. So to find out the answer for those or get a clue of those answers, you need to look for facts, the things that are showing in the market. Here's some of the top three clues that I found. One, the pricing of those stocks, AMC, GME, are determined by the option price, option contract price. Number two, when the GameStop revolution started on January 21st, which was a Thursday, some people started to pile in, but really the majority of the people came in on January 22nd, the Friday. And for those people, a very rational decision is to buy option contracts that are 1 week ahead, which means the option contract that will be expiring on January 29th. The reason is because for the longer period of contract that you're purchasing, you will spend more money. So for a place like this, where, quote unquote gambling place, most people would tend to pick the rational decision of spend small amount of money and trying to see how it goes. So the timing is on January 29th, the Friday. We'll potentially get some idea how this thing will play out in February, March, and so on and so forth. Number three, this is one of the things that happened on January 28th. Many brokerages started to limiting opening option contracts on those two stocks, AMC, GME. So if we were to see anything particular about opening new contracts after that day, chances are those are big players. So we might get some idea of how they think the market will be. So in summary, the clues are the pricing of the stocks are driven by the pricing of the option contract. Number two, looking at the time transaction sales on January 29th, the Friday, we can potentially get an idea of how those two stocks will be played. And we should pay attention to any opening contracts on that day. So with that being said, let's look at the GameStop. What you're looking at right now is the GameStop top 8 transactions happened on January 29th. It shows the time of the transaction when it actually happened. For example, the first one happened on 9:59 a.m. in the morning. It also lists out the option details, April 16 expiration date. Also the quantity, 2100 quantity call contract. The price the person paid, $316.25. So from that price, you can pretty much determine whether it's somebody is buying or somebody is selling the contract. The way you can read it out is by looking at the price they paid. For example, look at the price of the number 4 transaction. They paid about $300. So use that $300 and then compare to the market price at the time of the transaction. What was the market price? The bid was $289 and the ask was $300. For the $300, you can compare that with the bid and ask. And for the bid ask $300, you can potentially predict that people were buying $300. So it was a buying contract rather than a selling contract. Here was some background, but let's look at what really happened on that day. I listed out the top 5 things that we should be looking at. First one, 2100 call contract expiring April 16th. We cannot determine it was somebody who was buying or somebody who was shorting the contract. Number 2, we can get that is that there were people selling 2100 call contract. The price was at $12. So there could be a couple different scenarios why people decided to do that. One, they did that to close the previous position, or another possibility is they expect the price will stay above $12 by April 16th. Number 3, again, we cannot determine whether somebody was buying or selling the contract because the price they paid, $306.50, is in the middle of the bid and ask. So we don't know whether somebody was buying or selling. Number 4, we can see that people were buying 1,470 call contract at $20. So the rationale behind it is they expect the price to be above $20 by April 16. And then lastly, for number 5, there were people selling 1,500 put contract expiring April 16 at $30. This is very similar to the case number 2 above. They either decide to do that because they want to close the position or they want to be expecting the stock to stay above $30. With that being said, we can rule out number 1 and the number 3, but focusing on 2, 4, and 5. From this, you can see the similarity of those big contracts that the timing of those contracts on April 16. And the price, the highest price among those 3 are $30, and the lowest strike price was $12. So looking at the strike price of $30, which is this transaction, someone is expecting the stock could stay above $30 by April 16. Take a step back. Before GameStop really took off, it was traded around $20 to $30. So the fact that they are thinking it could stay above $30, meaning that they have some anticipation this thing will keep going on a little bit further. So from all this analysis, we can see the timing of the GameStop revolution. It will stay longer and it will potentially be around April where things really started to come down. Again, I have to emphasize here, all the analysis I've done here is to predict, to understand, and to get some clue how the market performs. This is not by no means showing that and telling that this is going to happen in 100% absolutely chances. Now, let's do the same exercise for the AMC. Let's look at the first one here. The first one is people were buying 3,000 put contract expiring on March 19th, 2021. They were paying about $1 for the contract, and the strike price is at $1. So what they're trying to do here is they're buying the put contract right now at a cheap, and if the stock started to drop, the price of those contracts will increase, and they can sell it back and get a higher premium and take the profit there, get a difference. In this case, they're anticipating the stock for AMC will drop in the next couple of weeks, leading to March 19th. So they're anchoring themselves and putting enough position at this point. And same goes for the second position, second items here. They were buying 2,550 contract expiring the same day at a $1 price. Number 3, there were people selling almost 1,900 put contract expiring on January 29th. So I wouldn't worry too much about this one because this is pretty much people will just close the position before the expiration. So let's cross out that. And the number 4, there were people selling almost 1,800 put contract expiring next Friday at $20. This is very similar to the GME case, which we analyzed earlier. They were doing that either because they want to close the position or they are expecting the stock price to be above $20 before the expiration. So in any cases, what you can take out from this as one key insight is that they are not anticipating the stock price of AMC to move too much because they are closing it. So they probably think the price wouldn't move too much. They want to take some initial profit, or they're putting a very low strike price for $20. Worst case, they don't anticipating the stock to move too much, so they anchor themselves at $20. So in either cases, the key takeaway is that AMC price will not fluctuate a lot in the next week. So with that being said, here's everything I want to share from our analysis looking at the transaction sales on both AMC as well as GME. This is by no means a prediction of how those two stocks will really perform, but it's just a way for us to anticipate so that we can prepare and plan accordingly. So in either cases, trade very, very carefully. It's a very volatile market in the next couple of weeks, and be safe out there. With that being said, I will see you in the next video. Thank you so much for your time.